Tesla is in a massive position of strength after building its EV castle and now is set to further monetize its success. This can be proven true by the company's increasing ability to bring in revenue outside of EV sales.
You look at units, right now I think on a trajectory toward 2 million, and then this is the drum roll, the Super Bowl, to now what I believe is monetization of supercharger, battery, and I think last night the biggest thing from the conference call, FSD talking to another OEM, because this from an AI perspective is ultimately how I see Tesla getting to $1.5 trillion, $2 trillion market
licensing
cap.
FSD to another OEM. I mean, he said early days. It's never clear. We got no clarity on who it is or how far along or whether it may even come to fruition.
Tesla stock is up for a massive run. These are not just our thoughts though, but that of a seasoned stock investor like Dan Ives, who has just revealed how Tesla can potentially hit the $400 mark in just a matter of months. Join us as we explore this incredibly fascinating Tesla stock prediction. Tesla stock has a history of volatility, but it's not uncommon for the stock to experience rapid price swings both up and down. This volatility is partly due to factors like market sentiment, news, events, and macroeconomic conditions. And while factors of volatility remain, there are also compelling reasons why long-term investors should not be overly bothered by short-term fluctuations. Today, we're going to take a closer look at Dan Ives' valuation of Tesla, and why it's important as an investor to remember that Tesla has a track record of rebounding from downturns and achieving new highs. Therefore, while Tesla stock is currently undervalued, there are several reasons why we believe it won't be too long until it goes back up.
I think it's Tesla's world. Everyone else is paying rent. I think this is just the first phase of the growth story playing out. Monetization that we're seeing on supercharger. Eventually, what we believe is going to be battery. You look at FSD, that's the golden goose in terms of AI. And obviously, look, the Gerber Kawasaki team, thought leaders when it comes to the view of Tesla. And Nicole, I think this is the get out the popcorn moment to where this is all heading in this green tidal wave that plays out. But remember, it's not just going to be Tesla. You're going to have success stories like Rivian. You'll have VinFast. You're going to have some of these transformational, the Fords, the GMs, obviously some of the European players. There's going to be many winners in this $5 trillion green tidal wave.
Yeah. Tesla's separate businesses in this case are its supercharging network, where the company recently signed deals with several automakers to open up its charging network. The company has an AI it uses to train its FSD software, which is likely to turn Tesla vehicles into robotaxis. Tesla also sells battery storage products to consumers and utilities, a business that grew over 220% year-over-year in Q2. Based on all this, Ives rates Tesla a buy with a price target of $350 a share within the next 12 months, which is a 35% gain from the current price of $258. However, Ives also noted that a $400 valuation can also happen soon. And speaking of what could work in Tesla's favor, an expert said that Tesla could be a big winner in case of UAW strikes. The United Auto Workers strike against the big three automakers, Ford, General Motors, and Stellantis, continues to loom as the deadline draws closer. In light of this, Nathan Bomey, Axios business reporter and co-author of Axios Closer newsletter, and David Madland, Center for American Progress Senior Fellow and American Worker Project Senior Advisor, joined Yahoo Finance Live to discuss the potential strike and its impact on the auto industry.
Dan Ives previously raised his price target for Tesla by $50, up to $350, stating that the company has demonstrated that it can monetize key products including its supercharger network and self-driving tech. Ives was responding to Tesla's second quarter earnings report, which dragged its stock price down 4% in pre-market trading the following day. He also praised Tesla's price war as a home run success in China, Europe, and the US, amid signs that traditional car makers are struggling to keep up pace with Tesla's cuts. While some other analysts have failed to see the bigger picture when it comes to Tesla, Dan Ives remains bullish on the stock. Hey guys, welcome back to Tesla Tomorrow. Ives has highlighted Tesla's trailblazing deal to share its supercharger network with other EV companies as a money-making opportunity, adding that its profits are likely to keep rising once it's able to roll out full self-driving more widely. And now Tesla is known for its massive electric vehicles and even more, and it has a competitive advantage in the charging infrastructure too. The automaker's supercharger network is the only global EV fast charging network, and in North America it's by far one of the most extensive and reliable. Tesla has built over 3,000 stations with more than 25,000 stalls all over the world, and it plans to open up its network to other EVs later this year. We believe this could be a pretty lucrative opportunity for Tesla, and it could actually pull in some pretty significant revenue from charging fees and attract more customers into the ecosystem. What investors have got to understand, though, is that Tesla's supercharger network is more than just a convenience for Tesla vehicle owners. It's a strategic asset that holds significant revenue-generating potential. This network of fast charging stations has played a pivotal role in Tesla's success and could continue to do so in various ways. Let's see a few of them. But before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla can continue to charge Tesla owners and potentially other electric vehicle users a fee for using the supercharger network. And the most straightforward revenue source for the supercharging network is this pay-per-use charging structure. The automaker has also introduced supercharger subscription plans in the past, offering Tesla owners the option to pay a monthly fee for access to the network. These subscriptions can be tailored to different usage levels, such as unlimited charging for a fixed monthly cost or a certain number of charging sessions, consequently generating revenue. Similarly, the pay-per-use model generates direct revenue with each charging session, contributing to Tesla's overall financial health. Interestingly, this subscription does not necessarily have to be about charging alone. Tesla can bundle the supercharging access with other services like FSD subscriptions or vehicle maintenance packages. It can offer comprehensive bundles that can attract more customers and create upselling opportunities. Already, Tesla's got a good rep for its products, and this appeal lies in its commitment to innovation, sustainability, performance, safety, and customer experience. Take its cars, for instance. Tesla has made a significant advancement in its battery technology, resulting in EVs with longer ranges. This means that consumers can travel further on a single charge, making EVs more practical for everyday use and road trips. Range anxiety is a pretty big concern with EVs, and Tesla has just succeeded in tackling it. Likewise, Tesla's over-the-air updates keep its vehicles up to date on the latest software, and this continuous improvement model means that Tesla owners get vehicles that are better over time, enhancing the ownership experience. As Tesla continues to push the boundaries of technology and expand its product offerings, it's likely that the automaker's appeal will only continue to grow, attracting even more consumers to its vision of a sustainable and electrified future. For superchargers, Tesla can conform to commercial partnerships with businesses, municipalities, and other organizations to expand its own supercharging network, and these business partnerships could cover the cost of installing the networks at their locations, and Tesla could then earn huge revenue through various agreements, including charging fees or revenue-sharing arrangements. Tesla's supercharging network can be integrated with its energy products like power packs and power walls. Supercharger stations can store access to excess energy generated from solar panels or off-peak grid electricity in energy storage systems, and then sell that energy back to the grid during peak demand times, thus creating a revenue stream. Since Tesla's going to have access to enough data, the automaker can then monetize the data collected from its supercharger network. This data will be valuable to urban planners, electric utilities, and other stakeholders that are wanting to understand EV charging patterns and infrastructure needs. Tesla could explore third-party partnerships, and while primarily serving Tesla vehicles, the supercharger network could potentially be opened up to other non-Tesla EVs through partnerships or agreements. With this, Tesla could charge fees to other automakers for access to its charging infrastructure, similarly to how Tesla adopted the CCS standard in Europe. Even better, supercharger locations can serve as valuable advertising spaces. The automaker can partner up with advertisers to display ads or promotions on supercharger stations or digital screens inside Tesla vehicles while users charge up their vehicles. It could explore innovative amenities and services at supercharger locations, like Tesla could offer food or beverage services, multiple premium lounge areas, or car care services for a fee. These added services enhance the customer experience and generate revenue for the automaker. Tesla's supercharger network is not just about collecting and charging electric vehicles. It's a multifaceted business opportunity that can create significant contributions to the company's overall revenue and profitability. As the automaker continues to expand its vehicle fleet and supercharging infrastructure, the potential for revenue generated from this strategic asset remains substantial. What do you think about Dan Ives' comments? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.